Is anybody else getting tired of headline after headline after headline when it comes to real estate, politics, interest rates? I wish that last week was a break from the norm, but it wasn't. For the first time after 7 cuts, we had the Bank of Canada pause on interest rates. On top of that, we had Canadian housing sales fall to the lowest levels that we've seen since 2009. And on top of that, we've got 1.2 million Canadians that are ready to jump off of the renewal cliff. I'm Tyler Wilson from Pilot Mortgage Group. I'm going to break down these 3 headlines for you this week, and I've got some special advice for you if you have your mortgage renewal coming up that your bank, your broker, and your friend don't want you to know. Let's get into it. First and foremost, after 7 consecutive cuts from the Bank of Canada, they paused on cutting interest rates, much to the dismay of many Canadians. The expectation amongst many Canadians, given the weakening economic conditions, lower inflation report that we saw, is that the Bank of Canada would hopefully cut those interest rates and make life a little bit more affordable. Unfortunately, they weren't coming to the rescue. Tiff Macklem cited concerns amongst inflation, the tariff war, and the uncertainty moving forward, given that we're about to have our Canadian government re-announce, whether that is Mark Carney and the Liberals or Pierre Poilievre, and they planned to just sit still for the moment. When you take a look at the forecast from economists moving forward here in Canada, the expectation is that we will still see at least 2 cuts before the end of the year. So we're not completely done in terms of this rate cutting cycle. No need to necessarily jump completely off the variable rate shift. If you would like some more information in terms of that Bank of Canada announcement, the breakdown, what the forecast looks like moving forward, make sure you check out our previous video. Great information there that we're able to break down for you. Secondly, housing sales. Not looking good in Canada. We reached a home to sales listings last month that reached the lowest levels that we have seen since 2009. The CREA, or Canadian Real Estate Association, has now downgraded what their expectations are for real estate in Canada for the remainder of the year. And we also had Royal LePage, which is a major real estate brokerage in Canada, come out, and they also noted that the expectations for the remainder of the year are not so rosy. That doesn't necessarily mean that despite falling real estate prices, interest rates, that there's not opportunity in the market. It's very important to understand your own specific market, the opportunities that exist, and where you could potentially capitalize inside of that market to find the next great home for you or you and your family, or your potential investment or vacation property. If you're looking for information in regards to those, that's what we do here at Pilot. We help our clients grow their wealth through real estate, and we've been working with our clients for years to help them identify these opportunities and capitalize in these types of markets. Last but not least, let's talk about this $1.2 million or 1.2 million person renewal cliff that is coming. You saw the headlines probably last year in terms of what the expectation was for 2025 with these 1.2 million renewals that were coming up. The banks are ready, brokers are ready, and you're ready if you're coming up for this renewal as well. Many Canadians expect that their payments will be increasing, and about 80% of the people that were polled in regards to that increasing renewal rate felt that they would be facing financial hardship with that renewal. You have many Canadians that purchased property in 2020, 2021 during kind of the COVID boom with record low interest rates. We had clients that were locked in at 1.79% that are now coming to renew those mortgages at 4% or above. It's pretty scary thinking that your rate might double. For many Canadians, they feel like their payment might double as well. That's not the case. And when you look at your mortgage renewal, the thing that your bank and your broker aren't telling you is that the more you shop, the better the price you're going to get. When you look at your mortgage renewal and our advice to clients specifically when you're dealing with your bank, when you look at the overall amount of real estate business over the last 2 years, it's been lackluster to say the least. Your mortgage bank, whether that be a big bank like RBC, CIBC, or Scotia, or a mortgage bank with a mortgage broker like First National or MCAP, they're all very hungry for your business. But they're not going to just give you the lowest rate. They're going to start you at the highest rate possible that you'll sign for. Many lending institutions will send you an interest rate sheet, maybe somewhere between 3 to 6 months prior to your renewal, and they'll ask you just to sign. Those interest rates, they're not good. Do not sign that piece of paper. What you will do and find with your lending institution is the more you go back to them and push them, the more they're willing to drop those interest rates. This goes directly with your bank as well as working with a mortgage broker. Mortgage brokers have access to many different lending institutions, but what they're not going to tell you specifically is that your bank is likely the best option for you in terms of that mortgage renewal. The reason for that is that because of this competitive nature that we're in 2025, you're going to see that that bank is willing to match or beat any pricing that's going to be offered from another bank or your mortgage broker. What that means for you is that you're able to renew your mortgage for the convenience of a signature. You take the rates that are available online or from your mortgage broker, you take them back to your existing financial institution, and from there, you're able to renew your mortgage for the convenience of a signature, not have to deal with paperwork, an application, or any kind of transfer costs. Sounds pretty good, right? The downside to this is that for many Canadians with these increasing interest rates, what you're going to find are higher payments on your mortgage. In order to manage those higher payments, many Canadians will choose to push out their amortization in order to keep the payments at a lower, more manageable position. Now, the downside to pushing out your amortization is that, yes, of course, over the long period of time, you are going to pay more interest on that mortgage if all you do are make the monthly payments on it. However, majority of lending institutions that we deal with offer what we call prepayment privileges, the ability to either lump sum, double up payments, or increase payments throughout the duration of the term. The way that we manage this with our clients specifically at Pilot is we take a look at your cash flow situation in your own home. If you're in a position where the cost of living has gone up, it's expensive at this point in time, and now your mortgage is about to go up, the last thing that you're worried about at this point in time is paying down your mortgage aggressively. So what we're going to look at is potentially taking that amortization, squeezing it out an extra couple of years so that we can ease the amount of cash flow that's going to go out of your home. From there, as life improves, interest rates potentially improve, what you're going to do is then start to look at your ability to lump sum towards that mortgage, which will immediately go towards the principal and cut down that on that amortization that we've extended. This is just a brief overview of kind of what we do here at Pilot and help our clients with renewals. It's very important that you look at your own position and have a professional help you evaluate where you're at today and your long-term goals. I'm Tyler Wilson from Pilot Mortgage Group. If you want help with this mortgage renewal, freeing up cash flow for you and your family, or looking for that next investment opportunity for you or your family, feel free to reach out to us. We'd love to help you. Thanks so much. Chat to you next week.